What if the financial world as we know it is on the brink of a massive shift? Are you prepared for the changes ahead? Ray Dalio, one of the world's most respected investors, believes that the world is entering a new era, marked by the rise and fall of global powers and financial systems. In this video, we'll explore Dalio's groundbreaking insights from his book, The Changing World Order, and uncover what these shifts mean for your investments. You'll learn how historical patterns predict our economic future, the forces driving today's changes, and the strategies you need to stay ahead. So, if you want to future-proof your portfolio, buckle up and stay with us until the very end. 1. Understanding the cycles of world orders. Throughout history, world powers have risen and fallen, each leaving a profound impact on the global economy. A world order refers to the dominant political, economic, and military system shaping the world at a given time. For instance, the British Empire ruled the 19th century, only to be succeeded by the United States in the 20th. Ray Dalio emphasizes that these cycles are predictable, driven by common factors like innovation, resource allocation, and military power. As one power peaks, its influence wanes due to debt, conflict, and societal divides, making room for the next leader. Recognizing these patterns isn't just history. It's a roadmap for investors to identify emerging opportunities and navigate economic uncertainty. 2. The three big forces driving change today. Ray Dalio identifies three transformative forces shaping the modern world. First, technological innovation is redefining industries and displacing traditional markets. Second, internal conflicts like income inequality and political polarization create instability within nations. Third, global power dynamics are shifting, with China's rise challenging U.S. dominance. These forces are interconnected, amplifying volatility across markets. For instance, advancements like artificial intelligence disrupt jobs and industries, fueling internal tensions. Meanwhile, geopolitical rivalries over resources and influence spark trade wars and economic sanctions. As these forces converge, investors must prepare for heightened risks and opportunities by understanding their implications on industries, currencies, and economic stability. 3. Lessons from history. Recognizing patterns. The past offers invaluable lessons for navigating today's uncertain landscape. Dalio highlights how financial crises, wars, and social unrest often precede significant power shifts. For example, the Great Depression and World War II marked the end of British dominance and the rise of the US dollar as the global reserve currency. Similarly, declining empires often accumulate unsustainable debt, leading to inflation and weakened economic growth. These patterns echo today's environment, with rising debts and growing global tensions. By analyzing these historical parallels, investors can anticipate major shifts and position themselves to capitalize on emerging trends, whether through sector diversification or geographic expansion. 4. Key signs of a changing world order. Understanding the signs of a changing world order is crucial for staying ahead. One major indicator is the weakening status of the US dollar as the world's reserve currency, evidenced by growing international moves toward alternative payment systems. Simultaneously, China's rapid economic growth and technological advancements solidify its influence in global trade and geopolitics. Other signs include escalating trade wars, military buildups, and financial market volatility. These developments highlight a world transitioning from unipolarity to multipolarity. For investors, this means shifting focus toward emerging markets and sectors positioned to thrive in a changing economic order while hedging against risks tied to legacy systems. 5. How the changing world order impacts investments. The evolving global landscape introduces both challenges and opportunities for investors. Market volatility is expected to rise, driven by geopolitical uncertainty and policy changes. Traditional investment safe havens, such as government bonds, face erosion due to inflation and higher debt burdens. Conversely, Emerging markets and sectors like renewable energy and technology present high growth potential. Currency fluctuations, particularly the weakening US dollar, can affect cross-border investments and savings. Investors must adapt by reassessing portfolio diversification, focusing on assets that benefit from inflation, and exploring global opportunities. The key is staying proactive and informed as markets realign to new global realities. 6. Adapting your investment strategy. In times of uncertainty, adaptability is the cornerstone of successful investing. To navigate a changing world order, Dalio advises diversifying geographically, reducing reliance on a single currency or economy. Safe haven assets like gold and inflation-linked bonds protect against currency devaluation and market downturns, while growth opportunities lie in technology and emerging markets. Investors should also consider dynamic allocation strategies, regularly reevaluating their portfolios to account for shifting risks and rewards. By hedging against inflation and geopolitical shocks, you can build resilience while capturing upside potential. The goal is not just to survive economic shifts, but to thrive amidst them. 7. The rise of China and its implications for investors. China's economic and technological rise is one of the most significant developments in today's world order. Its leadership in industries like AI, renewable energy, and infrastructure places it at the forefront of global innovation. China's Belt and Road Initiative and increasing trade dominance further reinforce its influence. However, investors must weigh the opportunities against risks, including regulatory unpredictability and geopolitical tensions with the West. For those who navigate these complexities wisely, sectors such as green energy, technology, and consumer goods in China offer tremendous growth potential, making it a critical consideration for any forward-thinking portfolio. 8. Navigating geopolitical risks. Geopolitical risks, including wars, trade conflicts, and sanctions, pose a growing threat to global investments. These risks often result in market volatility, supply chain disruptions, and currency instability. To mitigate exposure, investors should diversify across industries and regions while keeping an eye on safe haven assets like gold. Staying informed about global events and understanding their economic impact is essential. For example, energy markets are particularly sensitive to geopolitical tensions, offering both risks and opportunities. By adopting a proactive approach to risk management, investors can shield their portfolios while seizing opportunities that arise from market dislocations. 9. Long-term trends. Where the world is headed. The future of the global economy will be shaped by transformative trends. Digital currencies, including central bank digital currencies, CBDCs, could redefine global trade and finance, challenging the dominance of the US dollar. Technological advancements will continue to disrupt industries, with AI, renewable energy, and biotech driving growth. Emerging markets, particularly in Asia, are poised to become economic powerhouses, offering substantial investment opportunities. By aligning with these trends, investors can position themselves for long-term success. Dalio's perspective emphasizes staying ahead of the curve, as the most significant wealth creation occurs during times of great change. 10. Practical steps for today's investors. Preparing for a changing world order requires actionable steps. Start by diversifying your portfolio across assets, industries, and geographies. Incorporate inflation hedging instruments like gold and inflation-protected bonds. Leverage growth opportunities in sectors such as technology, green energy, and infrastructure, particularly in emerging markets. Stay informed about global trends and geopolitical developments to make agile adjustments. Finally, adopt a disciplined investment approach by applying principles like Dalio's, emphasizing risk management and long-term planning. With these strategies, you can protect your wealth and capitalize on the opportunities created by global transformations. The world is changing, and with it, the rules of investing. By understanding historical patterns and adapting to today's shifts, you can turn uncertainty into opportunity. If this video sparked new ideas, don't forget to like, comment, and share your thoughts below. Subscribe to Investing Guru for more insights to keep you ahead of the curve. Together, let's navigate the future of investing with confidence. See you in the next video.